The Johannesburg Stock Exchange opened a little changed in early trade, with its global peers mixed as the risk of slower economic recovery from the COVID-19 pandemic weighs on sentiment. Locally, hospitality-focused stocks were set for a firmer session after South Africa's move to lockdown level 2. You remember the president announced that last night. Trader and the founder of Herenya Capital Advisors, Mr. Petri Redelinghuys, joins us now to talk through the latest development. Mr. Redelinghuys, good to have you with us on the Daytime Update. If you could talk us through how the markets have opened after ending slightly firmer in the last session.
Good afternoon, I think it's time. Yeah, I guess our market's sort of off to a great start today. Top 40 index up almost 0.6%. It was a bit sort of sketchy in the morning, but it seems that there's quite a bit of buying coming through now, particularly in some of the local counters. So if you look at some of the indices that are doing really well, Sasol is charging really, really very well today. Industrials, unfortunately, not doing as well. But, you know, the Financial 15 index are putting in a solid sort of 0.8% higher. So, and also commodity stocks lifting a little bit. So it seems as though, you know, we ended last week on, I guess, a ray of hope, but, you know, the S&P 500 did end on the lows on Friday night, and we had a tough session again in Asia this morning. So we're actually performing relatively well compared to some of our peers. I mean, if we look at how Asian markets gave us the lead this morning, Tencent was down some 2.5%, Chinese index, the Hang Seng was down 1.5%, CSI 300 index was down around 0.4%. Of 1%. So one would expect the market to sort of come in on the back foot, which it did, but we are seemingly recovering. And, you know, we're sort of tracking with the rest of our peers in the outside world. FTSE 100 index also up around 0.7%. In Germany, the DAX is up just over 1%. So I guess a little bit of fear and confusion created last week. We'll have to see how the rest of this week tracks, though, whether or not this is just a bit of a bounce before we see a larger scale correction or not. I think that call is very hard to make at this moment. Markets, particularly if you track the US market, we've reached a really very crucial point on Friday's close, where the recent sort of over the last 12 months, the recent uptrend that we've experienced seems to be at risk if markets end even lower in the US this evening. We could sort of see the start of a larger scale pullback, not massive, you know, maybe 10, 20% or so, which is completely normal during normal bull market conditions. So it's nothing really to be super scared of. It's just, yeah, we'll see, I guess, over the next couple of days what the outcome of that's going to be. Right now, the market's kind of sitting around waiting for catalysts, and particularly in the local market, we've seen, you know, a number of different things taking place over the last few weeks. I think, you know, obviously earnings are coming out. It shows that companies are starting to recover from last year's COVID lockdowns. And also on a relative valuation, you know, perspective, emerging markets, particularly South African markets, are looking very cheap. So it's good to see some inflows coming and some buying taking place. Hopefully that can be sustained.
Well, let's focus on Sanlam for a moment. Sanlam has announced the conclusion of the agreement between Sanlam UK and Chesnara for the disposal of 100% shareholding in Sanlam's Life and Pensions UK Limited. What does the sale mean for the group and its shareholders? And what informed Sanlam's decision to withdraw?
Well, I'm not 100% sure what the you know, exact reasoning is for withdrawing from the market. I guess there's just a big push from Sanlam's side to expand into Africa and be a very sort of you know, sub-Saharan African dominant name, if you will, and pulling out of the markets that aren't making them as much profit as they would like, or as much margins as they would like. So this transaction is technically very small. It doesn't quite you know, meet the criteria to be called a categorized transaction in terms of the JSE listing requirements. But nonetheless, it's £39 million that are incoming onto the balance sheet of Sanlam in exchange, obviously, for the businesses that they are selling. Interestingly, though, the assets under management that they have under Sanlam Life and Pensions UK Limited will be retained by Sanlam Investments UK, which is you know, part and parcel of the package that they are selling. So they're losing some assets under management, but, you know, obviously they're doing that in order to streamline their business. And so far the market is responding relatively well. The share price is positive on the day. It was looking quite shady this morning, but it's now up around 1%. So, you know, it's not really the world's biggest impact on the company. I think it's just, you know, them taking their further steps along their restructuring plan to streamline their business.
Construction group Robex, they've released a trading statement in respect of the 6-month period ended the 31st of August 2021. How have they fared?
So Robex is doing pretty well. I mean, their share price currently trading around the 30 Rand mark, so that's up around 3.8% on the day. So the market really enjoying the trading statement that they put out. I think what's interesting is that they go from a loss position back into a profit position. So you're looking at headline earnings and earnings per share measurements up, 100%, 90%, that type of stuff. As these companies come back into profitability, obviously COVID-19, pandemic, lockdowns, all that kind of stuff created a very unusual set of trading circumstances for them in which they had no opportunity to earn revenue. Now, however, they're sitting in a very comfortable position. They've got a record-sized order book for work to be done over the next couple of years. They've started commencing on that work, and their earnings are starting to come through, right? And a couple of other things that stand in their stead is there was a big Sunroll roads contract that was awarded to them last year that they've started working on. It's going relatively well so far. The materials division is starting to do quite a bit better as well. They've put some stuff on hold for the independent power producer projects that they're, involved in. Renewable energy and independent power producer procurement program is what they're calling it. So there were some delays in that, but it seems to be sort of going towards getting back on track. So overall, it looks relatively good, right? And I mean, they stand to benefit from any sort of infrastructure spending or any sort of infrastructure development that South African government does. Obviously, they are, they're very involved in the tendering and that type of stuff for government construction work. So I think it's looking fairly good for them, and there's quite a bit of construction to be done over the next couple of years, particularly in the infrastructure side of things, and that's going to stand in their stead. So it's nice to once again see companies that really got hammered very hard during the COVID lockdown sort of coming back into their own and going back to situations where they're earning the same kind of money they did 2 years ago, and moreover that, in the case of Robex at least, they're sitting with a record order book, so things are looking good for the next couple of years for their business, as long as they can keep containing costs, obviously.
Well, I wonder how things are looking for investment holding company Remgro. They've also released an updated trading statement for the year ended 30th of June 2021. How are their numbers looking?
So their numbers are also looking pretty good. I guess not as great as the likes of Robex if you compare apples to apples, right? So the share price only up around 0.6%. So it's positive, but not that great. I mean, they obviously cite some trading difficulties during the pandemic as well. Earnings on their side sort of increased. Well, this is just a trading statement. We'll get the full earnings numbers on the 22nd of September is the anticipation. But they're sort of looking at between 61 and to 71% increase in headline earnings per share, which is great. They do cite that they could have done better, but they did make a 500 million rand once-off donation to the South African SME Relief Trust, obviously to help smaller businesses survive during the COVID pandemic, which was a great initiative, and that essentially reduces profitability of the company by a little bit, but nonetheless they managed to help a lot of people, and their businesses are recovering, right? The companies that they're invested in are starting to perform again, and they're starting to pass those earnings through to their investors again, to their shareholders.
And I guess that Goodwill also has some sort of equity. But let's focus on Stats SA. They're due to be releasing the mining production and sales for June and July tomorrow. What are you hoping to see from that data?
So there's a couple of things coming out. Business confidence is also out or due out tomorrow. So that I think is going to be a relatively important one to watch. Business confidence rising is obviously what we want to see. I do suspect that would be quite a bit better than anticipated. Obviously now, yesterday, we had the lockdown level adjustment announcement, so that's not going to be too much of a factor in these business confidence numbers, but to see that continuously rising would be great. On the mining production side, I don't want to stray too far away from what the forecasts are. So month-on-month mining production for the last period reported was negative 3.5%, so mining production reduced. This time it's forecast to grow by 1%. So I think anything in excess of that 1% growth would be very positive for the mining sector. Obviously, we've faced a number of lockdown challenges. This is an old tune now. We'll probably be singing it for the next 2 years, to tell you the truth. But the expectation is really for them well, my expectation is for them to beat that 1% forecast. And if you look at the year-on-year production, that forecast is at a 21.4% increase. Obviously, that's off a very low base. Last year, they were producing nothing. Compared to this year, they're producing something. Well, not nothing, but, relatively speaking with the lockdowns. So the previous number on that was, for the previous period reported, was 21.9%. Consensus is coming around somewhere between 21.4% and 22.5% increase in annual year-on-year mining production. So I think, once again, I'm looking for those numbers to beat. It'll be great to see them slightly ahead of that. I don't think we've had any major incidents or shutdowns. I think these mines have gotten back to business, if you will. They've had a very favorable environment with strong commodity prices. Recently, gold has been under some pressure and the rand's been strengthening, but over the last 12 months, they've had very, very favorable conditions, and hopefully they can match those favorable conditions with high output numbers so that they can make big profits and pay nice dividends to the shareholders, right?
So we'll certainly be looking forward to those numbers being released tomorrow. Thank you very much. That's Petri Redelinghuys,